Hello again. Welcome to today's discussion on improving trading risk through surveillance and monitoring. My name again is Manesh Samtani. I'm the editor for RegTech Asia. Now, amid the pandemic, there's been a tumultuous time in financial markets. Financial institutions have had to adapt to higher levels of uncertainty, volatility, and trading risk. And not all firms have been as able to adapt as quickly as they would have liked. We're here to find out about some of the controls, monitoring, and surveillance processes that have been or should be put in place to mitigate some of these risks. So joining us on our panel today to talk about this is Parsa Khoshdel, private banking professional with extensive experience designing and implementing technology solutions focused on regulatory compliance and risk management. So Parsa is operational risk change lead for banking at Synpulse in Singapore. Welcome, Parsa.
Thank you. Looking forward to the discussion.
Thank you for coming. And then we have Jerome Lambert, a technology specialist who works with financial institutions on regulatory compliance, surveillance, and monitoring in trading functions through the use of automation and intelligence. Jerome is APAC Market Director for Financial Market Compliance at Actimize. Welcome, Jerome.
Hi, good afternoon. Thank you.
We also have Kelvin Ko, who I believe is having a bit of trouble connecting, but we'll get him on soon. Kelvin Ko is Senior Vice President and Head of Surveillance at SGX RegCo. Kelvin is focused on market surveillance and obviously one of the most important financial centers in the world. Last year, SGX RegCo, in collaboration with MAS, released a practice guide to help brokers enhance their trade surveillance programs. So we'll get Kelvin on the line shortly. Before we sort of kick off, I'd like to remind the audience that we will try to take questions towards the end of the discussion if we have some remaining time. If we can't get into any of the questions, we'll try to address them by chat or email. But feel free to submit those questions in the stage chat box. Now, I would in fact like to ask Parsa to help kick off the discussion by maybe talking about some of these new trading risks I alluded to earlier. The pandemic has brought on this year. Parsa, based on your discussion with market participants, banks, and so on, how have these institutions been impacted by sort of this new environment, and how have they sort of been adapting?
Sure. So to answer this question, I think there's a couple of elements that need to be taken into account. One is a record high in trading volume and market volatility, which is something that we see we see this pattern regionally as well as globally across the board in all the different exchanges. Just to give you a few examples, MAS reported that FX trading volume in March hit a record high because a lot of people were hedging, offloading, or readjusting their investment positions. In February 2020, the aggregate volume of SGX FX futures were up 52% at 2.44 million contracts. Also, like the profits from Singapore Exchange jumped 38% to 13-year high in the first quarter of this year. Due to, obviously, all of these are due to extreme market volatility and because of the coronavirus outbreak that boosted equities and derivatives trading volume. Now, this is what we observe regionally. At the same time, the same pattern exists in U.S. markets. ICE, who owns the New York Stock Exchange, has indicated that they've handled daily average of 7.6 million futures and options contracts in February, which is a new record, a new monthly record for them. Same goes in Germany as well. Deutsche Börse has said that in June they've had the heaviest day of share trading since 2008. So we can go on and on and on about all of these examples that shows that there's a lot of market volatility and there's record high in trading volumes. So this is one aspect of what we observe. The other element that we see is the trend of working from home. This was already something that a lot of financial institutions were moving towards, but obviously when the pandemic hit, there was not much of a choice, and there was a significant boost in this particular trend. So much that locally we saw MAS reporting in July that 85% of the financial services workers in the financial services industry have been working from home, have been able to work from home in phase 1 and phase 2 of the circuit breaker in Singapore. So all of these elements put together really poses a new challenge to the industry, that the communication channels that are traditionally used by banks, let's say using the landline and calling the client's registered number, is no longer the most preferred way of doing things. There are a lot more communications are moving towards more digital channels, and there's a variety of them. There are emails, there are messenger apps like WeChat, WhatsApp, and so on. And you also have video conferencing tools such as Skype, Microsoft Teams, and so on and so forth. So all of these put together is really a change of scenery when it comes to sales practices and how financial institutions need to rethink their approach towards regulatory and compliance.
Yeah, I guess it's the market volatility is very true, and overnight you had some banks, they had to close their dealing room, right? And they started to send people working from home. So how can I benefit from the market volatility? How can I take advantage of the market conditions while my risk team, my trading team, my advisors, my financial advisors are working from home? And all these people need to interact with the market participants, with their customers, in order to take advantage of what's happening on the markets. And when we talk about volatility, everybody have certainly noticed the overnight volatility of a large player on the unified communication domain. And that's very interesting because we are working from home and we are using tools that we were not using before. 6 months ago, I was not using Microsoft Teams 16 times a day, right? I was not using WhatsApp maybe to interact directly with my customers. Or maybe we can name them, Zoom and Google Meet, whatever. Plenty of new modalities that I want to use as an end user because now I'm working from home. I'm home. I want to use my own tools maybe. And indeed, it is a challenge because this happened overnight. All these people working from home, interacting with their customers, taking advantage of market conditions, using new tools. It is not easy for the compliance officer. We'll talk about it later, but this is the situation. But if you think about it, we see it more as an acceleration, because in fact, for a few years already, you have millennials, within your staff, within your sales advisors, within your teams, and they have been already asking for the use of new communication tools, right? But so far, the reaction was, if I don't know how to monitor this modality, if I don't know how to recall WhatsApp, don't use it for business. That was more the position in the past, like just maybe a year ago or 6 months ago. Now we have no choice. Everything is accelerating, so it forces the adoption of new communication modalities to keep trading, to keep doing business, and to take advantage of the current market situation. And I guess it's an interesting dynamics for our customers.
So given this higher trading volume, volatility, people working from home, new communication modality, and so on, when we sort of try to put all of these things together, let's talk about, what can go wrong? Parsa?
Just a few examples of when there's a significant market volatility, there's obviously big winners and the big losers potentially in the market. Now, the traders who are on the wrong side of the deal and they may be experiencing steep losses due to market volatility may feel pressured to generate results by engaging on unlawful activities such as market manipulation. A recent example of this is what was happening to a news that came out of Denmark. Denmark's biggest bank, Danske Bank, was reported to have been routinely entering into wash trade. And in June, they were also reported by the Danish authorities. Another example is insider trading. Now, obviously, non-public price-sensitive information is valuable at all times. But this is even more so when, due to coronavirus, some earning reports or other disclosure filings are delayed. So there is an additional risk of insider trading when it comes to impact that pandemic has had on the market. Other examples are front running. Again, when you have traders who are experiencing significant losses, they may be tempted to trade ahead of their client to offset some of the losses they have on their own books or for their personal gains. And finally is another element that we have a very good reference for this one, and that's the financial crisis in 2008. That when markets are turbulent, financial institutions sometimes tend to be overly optimistic about market recovery rates, or maybe tempted to downplay the risk of the financial products and fail to provide adequate disclosure. And this is something that we saw post-financial crisis, that regulators and auditors, this was the main focus, and we expect the same trend to exist post-pandemic world, and this will be one of the key focuses that the regulators, we expect them to have post-pandemic, to make sure that the sales practices, even during this pandemic, and the regulatory requirements were adhered.
So Jerome, I guess you've also been speaking with a lot of banks, brokers, other market participants to sort of try to address some of these risks. Have you seen sort of an active effort to bolster controls and monitoring this year in particular to mitigate these risks?
Yes, indeed. So they do more, but they do more because of the regulators. So part of my job as well is to meet with regulators. And I used to travel like everybody else, certainly. So I used to visit the SFC, I used to visit the ASIC in Australia. And I guess what Parsa said is very true. The trend around regulations, controls, trading transparency has been around for years already, right? So it's not new. We are all the regulatory bodies in the US, started with Dodd-Frank, or in Europe with MiFID II, market abuse regulation. Then what else we had? We had the FX Code of Conduct as well, very applicable for our region. You know, this has been around for maybe 10 years. More and more regulations in order to bring more transparency on the trading process and on the trading supervision. And now what's happening again? It's an acceleration. So even though I cannot meet with regulators anymore, we are still in touch with them. We still read what type of guidelines they issue, and we can name some of them. So to illustrate this acceleration, so the ASIC, for instance, in Australia, very early during the pandemic, they said they put together, how they call it, a market integrity update. So it's a little bunch of guidelines, a couple of bullet points on the website where they clearly define how market participants should do in terms of business continuity and also in terms of supervision. So two big pillars on this market integrity update from ASIC: business continuity in one hand and supervision arrangement on the other hand. And when you start looking after the content of this guideline, you have one bullet point specifically focusing insider information. They want to make sure that the market participant won't use the COVID-19 situation as an excuse in order to gather company finance information or business performance information. Like, can you tell me how your company is performing during this COVID-19 situation? And maybe I want to take advantage of this information to trade ahead the news and so on and so forth. So that was one example of trying to take advantage of the current situation and breach some market abuse rules. Another one about supervision arrangements, it is about the use of mobile devices. So they clearly say your staff will be working remotely. Doesn't matter if they work from home or from the beach, but they will be working remotely and they will be using mobile devices. The same rule apply to these modalities than the rules that you used to have for the other modalities. So you've been recording trading voice for years. The same rule apply to the new modalities that you will bring in. And within the ASIC article, they clearly say that no matter the modalities you provide to your people, to your staff, make sure you can record it. So it's a very strong message, and they released that in the middle of the pandemic. We can take other example from other regulatory bodies. In Hong Kong, for instance, for the insurance business, but the IA, the insurance authority, put some guidance on how to distribute product through video conferencing tools. So of course, all the agents are also working from home. They cannot go Starbucks selling insurance products, and maybe they will use new modalities to distribute their products. They will use Zoom, Skype, whatever. So the Hong Kong authority for insurance, they put together some guidelines on how you can use these modalities to distribute insurance products. Very interesting. That wasn't here 6 months ago, right? And last but not least, maybe also still in Hong Kong, the SFC, they have put in place, they clearly say that all the market participants, they have to put in place written policies and procedures on the use of instant messaging applications. So here they are clearly targeting not the mobile anymore, not the video, but another modality, which is the instant messaging modality, the WhatsApp and the WeChat typically. So you see, different regulators, they start highlighting new modalities that will come into play on how you are doing your business, and that will clearly, it's an acceleration. Again, trading supervision has been around for years, coming from from other countries and other jurisdictions, and now it's accelerating.
Yeah, and things have really changed over time, right? 5 years ago, there wasn't even a consideration of including, messaging chat in the surveillance process. Parsa, do you have some thoughts from sort of your private banking experience or some of the professionals that you speak to in that sector?
Absolutely. I think the key trend, as Jerome mentioned, is to move away from looking at instances where let's say the order was placed, to move towards holistic surveillance, understanding the context of the conversation. One example that I can give you is comes to pricing, like agreeing on a particular discount with a particular client for a certain product type. Now, typically, what traditionally the bank do in control execution is they listen to the tape of where the relationship manager indicates that this discount was agreed. But the reality is there may have been many other conversations before that is not available to the control execution team at that point of time, but having holistic surveillance allows us to really have that context in control execution and be able to say, okay, between this particular RM and this particular client, I would like to hear all the conversations that they've had with respect to US stocks and how much discount they're going to provide. And this is really a paradigm shift, because traditionally this has never been available to compliance and the surveillance teams. This is one example. And also worth noting is that one other trend that we see in the financial services industry is moving towards providing some of these disclosures automatically and via digital channels. So instead of leaving it to chance to say whether the relationship manager or the trader is making the sufficient disclosures or not, they want to see to what extent can some of these disclosures can be automatically sent via digital channels to the clients. And that again is something that if this leg of it gets automated, ideally we can automate the control side of things as well, which will be a win-win for everyone. The client does not need to spend so much time listening to various disclosures. The relationship manager doesn't need to spend so much time explaining stuff over and over again. And the control execution team also doesn't need to spend so much time listening to an entire 2-hour conversation to figure out what was said and what was not said. So it's really a win-win for all.
Yeah, that's really interesting. Jerome, I wonder if you could maybe talk about, I guess, some of the more specific controls that you're sort of using, to kind of incorporate these new communication modalities into the monitoring process.
Yeah, absolutely. So the idea is it's indeed to use all the data that we have that are surrounding the trading process in order to better detect risky situations, right? Sometimes we talk about true risk. So if you want to identify the true risk, you need to be able to not only look for the structured data that are coming from your trading platform or that are maybe also coming from the exchange, because I guess the Singapore exchange is also helping the market participant to pinpoint some specific trading patterns that they may capture from the market. So, but you must be able to enrich this structured trading data with additional data in order to enrich your analytics, to augment your detection capabilities, and hopefully being able to detect real suspicious activities, real collusion activities, real market manipulation activities that are happening through different market participants, through different communication channels. And you want to be able to highlight these activities in a short period of time. Okay, you don't want to start investigating 2 years later, because it's way too late, and the company name is already in the news. So now to to be able to detect market abuse situation or mis-selling practices and or collusion activities, you need to combine these data sets. Combining these data sets and having analytics on top of it, obviously we're going to have to rely on new technologies such as AI and machine learning in order to go beyond the typical rule-based, threshold-based detection models. You know, if you want to identify across WhatsApp, WeChat, and phone calls that the conversation we are having right now, it is related to a trade that we're going to do maybe 4 hours later, then you need smart analytics, smart detection capabilities to bring things together, to holistically look at your trading activity, communications and transactions, and be able to identify the bad guy, if I may say. And this is clearly now possible thanks to big data technologies and advanced analytics that are relying on AI and machine learning.
All of this is super interesting. I'd like to actually, if we can stop for a second and sort of take a poll of the audience. I'd like to sort of get a sense from the audience, from who's listening, whether, sort of which communication modalities are actually being captured in their monitoring processes. If we could get that poll showing, I think it's showing if the listeners can sort of click on the polls button. There's a question there for financial firms. What communication modalities are already included as part of your surveillance monitoring programs? Phone calls by mobile, video conferencing, chat communications, and email. So while we're waiting for responses on that, I wonder if Parsa, if you could maybe talk about sort of going back to the wealth management and private banking. There's all these sort of requirements, investment suitability, disclosures, pricing, and so on. Given that these new modalities are out there and being used, can you sort of talk about how these requirements are being addressed in that respect?
I think to make sure that the regulatory requirements, given all we discussed before, the record high in trade volumes and all the different communication channels, the reality of the situation, tackling all of these challenges in the traditional way, looking at extracting all the information manually and going through the steps case by case manually is just no longer feasible, resource perspective and the intensity of the activities. So I think the first key steps that we observe in many of our clients that are moving towards is automation. A lot of the steps that a control execution team takes are extremely manual and mechanical. Like, just give you an example, insider trading, for example. When typically, traditionally, majority of the well-established banks have some sort of a data analytics sandbox or data analytics solution that gives them insider trading alerts. But when they get each of these alerts, for each of these alerts, they need to go fetch all the relevant news. Then they need to go and get all the financials. They need to get all the trading patterns. And usually these are in various different systems. Sometimes it's as mechanical as Google search and so on. And obviously the compliance and the trade surveillance team does add value eventually by exerting judgment when all of this information is provided to them. But the steps that are leading to that judgment are extremely mechanical and can be easily automated. And this is where robotic process automation, RPA, comes into play, or even more sophisticated solutions, more holistic trade surveillance platforms that looks at all of these things in one. This is the automation is one piece. The other piece of it is what we briefly touched on is the holistic communication. Now, holistic communication surveillance allows them, as I mentioned before, to look beyond what was said in one particular trade. So when it comes to investment suitability, for example, within private banks, there is a hard requirement to make sure that there is no solicitation on products that are non-advised by the investment office within the bank. So if the bank has a negative view on a particular product, they should not be soliciting when they're discussing it with the client. Now, traditionally, how the banks look at this is they look at the call, they look at the voice log that was discussed when the trade was placed. But we all know that this might not be the only one that particular trade might have been discussed. They may have exchanged an email before that saying that, yes, this is an interesting product. So without having a holistic communication surveillance platform, the control execution team, compliance officers, they are not able to really have this.
Yeah, they don't have all the information.
Yeah, and if we put all of these elements together, then we can really change the definition of risk-based approach. If you ask any risk manager within the industry, everybody thinks to an extent that they are doing their controls with a risk-based approach. But the risk-based approach is only based on the structured data that they have, trade data, whether the client is a vulnerable client, and so on and so forth. But they don't really know what happened in the unstructured data, meaning the calls, emails, the communications. And if we really manage to focus on the unstructured data as well, we can really change the definition of risk-based approach and make it a lot more meaningful.
I guess it's a good point. Some regulators, they call it the intent, right? So you must have the ability to prevent and to detect the intent of creating, of taking advantage of the market. How do you capture the intent, right? So something didn't happen, so you must be able to capture some clues here and there within the chats, within the emails, within maybe the printing logs. We had one of our customers, they wanted to augment their surveillance capabilities by bringing printing logs and building logs access into the platform in order to identify if, some people are living together, coming together, printing stuff before the weekend, some kind of non-public information documents, these type of things, in order to, again, bring more clues to the investigators, in order to hopefully detect or prevent any kind of market abuse. Yeah, it's a very good point. And if you think about the programs that you have to implement when you are a head of compliance, usually, because we talk about the program here, it's a journey, it takes time, you go step by step, but generally speaking, we see three key pillars. So the first one is really the coverage. First of all, when I'm running a compliance program, I have to make sure that I comply with the local and global regulations. First step, coverage. Yeah. Coverage in terms of compliance and regulation, but also coverage in terms of products. Do I have the ability to monitor what I'm trading, for instance? Cryptocurrencies, do I have the ability to monitor cryptocurrencies, OTC deals, and so on and so forth? Do I have the ability to, in terms of coverage again, to monitor my WhatsApp, my WeChat, my Microsoft Teams, and so on and so forth, in all languages? This is really the first aspect of these programs, the coverage. The second aspect, it is about the detection or the precise detection, right? How do I make sure that I don't bring in front of the compliance thousands of alerts or false positive? And I guess it is something that it is very important from an operational aspect for the banks. I don't want to start a compliance or surveillance program that will trigger false positive, right? Because I don't want to lose time, and I want to focus again on the ability to detect true risk. So if you want to do that, you need to rely on intelligent or precise analytics based on machine learning, based on behavioral analytics, and so on and so forth. So this is the second aspect of your program, the intelligence of the analytics or the precision of the analytics. And last but not least, I guess the third pillar as well that has to be considered, it is the operational aspect, the efficiency of doing my investigation. Because at the end of the day, of course, we have to comply with regulations. Obviously, we want to detect risky situations, but at the end of the day, we have people, compliance team, surveillance team, who are looking after the alerts, who are reviewing the cases, who are going through the data, and they have to follow some specific workflows in terms of escalation. They need to have the right tools, again, from a case management perspective, to quickly dispose, review an alert, escalate an alert, put some documents, and potentially hand it over to someone else, audit, regulator, whoever else may want to see the efficiency of your compliance program and supervision program. So I guess these are the three key areas that has to be considered when you are starting this compliance and surveillance journey: coverage, analytics, and operational aspect with the case management, and what type of tools can I give to my people to work on these alerts efficiently.
Thank you, Jerome. Just turning to the poll results, we have about 40, 50 people that have responded to this. But just maybe you have some comments on this, but 56% of people say they do incorporate email communications.
Yeah.
Only 23% say phone calls.
Yeah.
Only 16% video conferencing.
Yeah.
And 5% chat communications. So,
yeah.
So I think this again sort of highlights that the chat communications are, maybe something more can be done in that regard. What comments do you have on these results?
It will change very soon. we do the same survey in 6 or 12 months, and you will see different results, that's for sure. The fact that emails are surveilled, yes. And you know what? Because it's very easy. Since how long you've been doing a control search to search for a keyword? For years, right? So it's kind of easy to bring a lot of emails into a database. I make it simple, but you bring a lot of emails on a repository and you search for specific keywords. Control F, search. Simple. Okay, now, so it's the first level, okay? And then of course, if you want to go to the next level, this is where the complexity kicks in. Because when you talk about the voice, how to understand the voice, you need to transcribe the voice, you need some natural language processing techniques to understand the content of the conversation. It becomes a little bit more challenging to deliver that, right? And also, not only to analyze, but also to capture. Because before analyzing the calls, before analyzing the emails, it's easy. It's already captured. You have an email system. But before analyzing the WhatsApp, the WeChats, or the Microsoft Teams, you need to be able to record these interactions. Are you able to record WhatsApp? Do you have the right mobile strategy in order to capture and record the SMS or the Microsoft Teams video chats that we are having right now, plus the chats that I'm writing in parallel, and the attachment that I put on the chat room? Do you have the right capture mechanism to record these interactions? This is the foundation. So I guess this is maybe, I'm not too surprised, but I'm sure it will change, and very soon.
So we have a question from the audience. To what extent are workflows crucial to the development of surveillance? So in brackets, he basically mentions beyond the last decade standalone AI black boxes of transaction and message monitoring. So yeah, to what extent are workflows crucial to the development of surveillance? Do you want to take that, Parsa or Jerome?
Sure, I can have a try. So I believe it's extremely important. Having the sufficient workflows and which mimics the process within the bank enables for full accountability and traceability of the decisions that were made along the food chain. So usually you have one compliance officer or a control execution team who does the first round of analysis. Then they may go to markets or the traders for clarification. Then that clarification comes back. Then they may escalate it to their line manager, and so on and so forth. There are so many different ways that depending on the escalation path that the organization has, and all of these steps are required by regulators. When they come in for an inspection, they will pick up these cases and they say, okay, what happened to this exactly? Now, traditionally, a lot of the banks tend to keep record of such cases in Excel. And obviously, there is not much control over it. Therefore, when the auditors or regulators come in, they may tend to scramble to figure out, okay, now what was the reason for this particular case that happened 1 year ago? But having an established workflow tool in place allows us to have all of this audit trail laid out completely and know what decision was made and why. Not to mention all the efficiency gains. Obviously, if you're within the tool, you can already ask for information via Outlook. You just need to type something, and already the receiving end will already see it via their email. Obviously, saves a lot of time for them as compared to logging into their Outlook and then going into the system and hopping between systems, and so there's a lot of benefits. Absolutely.
I'm being told we have 1 or 2 minutes left. So yeah, I guess that happens when you kind of get into an interesting discussion. So for the attendees, apologies that Kelvin from SGX wasn't able to join the call. He wasn't able to get the connection going. I suppose we have an issue with a new communication modality. In any case, I thought maybe each of you could maybe just spend 30 seconds, quick final thoughts on maybe recommendations or key steps you think firms should be taking to enhance their surveillance and monitoring, I guess to avoid reputational, regulatory, legal risk, and so on. Go ahead, Jerome first maybe.
So as you said, key steps. So it is a journey. You have to start adding, the right capabilities in terms of capture, in terms of surveillance for the right modalities. It's a long process, and I guess because of the current situation, we have to really, most banks and most financial institutions, they really have to kickstart this process sooner than later. And again, it's a journey, so you won't reach the holistic surveillance capability overnight. You must be sure that you have all the building blocks in place in order to deliver a comprehensive compliance and surveillance program across your organization. So yeah, we are. It's a process, but we can clearly we can help, and this is what we are doing for our customers. Yeah.
Parsa, final thoughts?
Sure. I'd like to quickly touch on the last statement that I made in one of the questions on changing the view on risk appetite and on risk. Traditionally, one of the constant struggles and challenges that risk managers have is the question that, are we doing enough? Are we doing enough to protect the bank from the risk that they're exposed to? And unfortunately, usually the risk appetite discussion is driven by resource constraint. There is a very unique opportunity here to really turn the table using technology by going for holistic surveillance that allows us to structure the unstructured data and really look, instead of performing sampling and looking at cases that maybe 80% of them will turn out to be completely okay, we can actually include everyone in our surveillance program, and we can look at and we can only focus our efforts on the gray case or on the cases that we know that there's something definitely wrong with them. And this is truly a paradigm shift in risk-based approach, because we can really see that now we are focusing our effort in the cases that we know that they are worth looking at. But as opposed to the traditional approach when we are just sampling, and most likely for majority of cases we will not have many. So I think that this opportunity is something that has not been around so far, and financial institutions are already looking into it, and the ones who haven't should already jump on board.
Thank you, Parsa. That's a nice place to end. Unfortunately, we've run out of time. Thank you so much, Jerome. Thank you, Parsa, for your time today, and very interesting to hear about these new communication modalities and sort of how they fit into they should fit into the overall surveillance and monitoring process.